Hey everyone, and welcome back to the channel. Today we're going to be starting a new series called Money for Beginners. We're going to be starting this series talking about one of my favorite topics, which is credit cards. Now, I've had a lot of people reach out to me and ask me to put together this series talking about when to get a credit card, what credit cards really are, and how to make the best type of payment on their credit cards to avoid interest and avoid paying more than you need to while getting the best benefit for your credit cards. So this is going to be a series of videos, not all in one, because that would be about 4 hours long and I'd lose you at about 20 minutes in. We're going to be talking about what credit cards are, the best way to use your credit cards, and the best way to avoid interest on those credit cards. This is not a sponsored video. I don't speak for any of the credit card companies. I'm going to tell you about my experiences and my advice on just best practices that I've picked up through my own experience in using credit cards and kind of learning through trial and error. So let's start with talking about basically what a credit card is. Now, a lot of people think that a credit card is free money. And I know that people make that mistake when they're young, when they get that first credit card, they get it in the mail and they say, you've been approved for $10,000, $15,000, and they go out and they just splurge. And then they get that first credit card bill and they realize that they have to pay that money back. And that's essentially what a credit card is. It's a loan from the bank or the finance company allowing you to use someone else's money for purchases. Essentially, it's a personal line of credit that the bank is granting you. So think of it this way, it's using other people's money to buy stuff for you right now. Now with that comes the caveat that you have to pay that money back with interest. Now we're going to talk about interest in another video, but it's very important to remember that money is not free. You do have to pay interest on that money. Now, interest on credit cards is one of the highest rates of interest that you're going to pay on any kind of loan that you take out over the lifetime of your financial career. Mortgage interest is usually between 3 and 6%. Car loans can be anywhere between 2.5 and I've seen them as high as 26, 29%. Credit cards usually go between about 13 and 27%. Now, the difference between other types of loans and credit cards is that they're called revolving types of debt, revolving debt. What that means is that every month your statement closes and you get charged interest on any statement, on any balance over the amount that you pay. Now, we're going to go over that in another video, but I just wanted you to think about that. So with credit cards, unlike other types of loans, you can actually get the money for essentially free as long as you pay the amount back before it's due. So generally there are two major types of credit cards. There are basic credit cards and charge cards. We're not really going to talk about charge cards, but think about charge cards as you get to use the card, but you have to pay it all back, or you get hit with a big penalty. Credit cards allow you to carry a balance. Now, the balance is what you get charged interest on. So, the basic question we're going to be answering today is, should I get a credit card? Now, I'm going to be assuming that you're watching this video, you're new to money, you maybe are young, you have maybe a checking account, and you're out on your own and you have a debit card, but you're thinking, you know, I've been hearing a lot about credit cards, or maybe I'm getting those solicitations in the mail, and is it time for me to get a credit card? Well, the time for you to get a credit card is when you're ready to get a credit card. And that's probably not the answer that you were looking for, but the essential answer to when should I get a credit card is completely based on your personal preferences and your spending habits. Now, personally, I have a number of credit cards, but my spending habits are that I use my credit cards for essentially everything. The reason that I do that is because I pay off my balances every month. I'm very meticulous about that. I set them on auto payment, I make sure that I don't spend outside my means, and I make sure that I pay them off every single month. I hate paying interest. In fact, the last time I paid interest, it was a mistake because my bank didn't process my auto loan or my auto payment correctly. Auto loan's a different issue. And the payment didn't go through correctly. I had to call the credit card company to get the payment processed. They cleaned it up and they refunded the interest. It's the last time I paid interest. So, for credit cards, what you want to look at is how do you spend money? Do you spend it on small items every single day? Most of us do. We buy gas, we buy groceries, we buy little things at Target. Yes, I know you go to Target a lot. And do you pay off your debts? Do you pay off your bills every month? If you're one of those people that is on a strict budget and you can afford to save up enough to pay off your debts every month, then a credit card is probably something that you can afford to take on. If, however, you struggle to pay your bills every month, a credit card is probably not for you. The reason I say that is because a credit card is a very large temptation. What do I mean by that? Well, think of it this way. Unlike a debit card, a credit card allows you to use the money today but not pay for that spending for between 30 and 45 days. What I mean by that is that you're going to spend between your statement open and close period. Once your statement closes, you're going to have a period of time that you can pay back that amount of spending. It's the difference between when the statement closed and your payment due date. It's usually about 30 days after the statement closes. During that time, you're hopefully going to earn money, and you're going to earn enough money to pay off that debt. Now, if you are spending all that money that you're earning on other items with your debit card, and the statement balance comes due and you don't have the money to pay it off, then you're just digging yourself a hole. This is how people get in trouble with credit cards, because they rack up a huge credit card bill. The credit card bill comes due and either they haven't saved enough in their checking account to pay it off, which means they're going to carry a large balance to the next payment date and they're going to pay a lot of interest, or they've spent it all with their debit card, simultaneously spending on their debit card and their credit card, and they're just going to dig themselves a deeper hole, getting deeper into debt. So what you want to do, and this is a technique that I've suggested to many people, and in my personal opinion it works. You don't have to use it, just the suggestion is, if you're currently using your debit card for small everyday purchases and you think you can handle a credit card, get a low limit credit card. Now, this is going to be dependent on your credit score. We're going to talk about credit score in another video, but if you've never had a credit card, you probably don't have very established credit. Maybe you have a car loan, but you probably are paying a lot of interest on it. Go to your bank and ask them for a secured credit card. This is going to be a credit card with a lower credit limit, probably between $500 and $1,000. This is fine. What you want to do is you want to switch your spending to that credit card. You're then going to pay off that credit card every single month. You're not going to spend on that debit card. Now, you're probably thinking, but I spend on my debit card so I know exactly how much money I have. And we're going to talk about how that works in a minute, but think of it this way. You're going to build up enough in that checking account later, between the time that the statement ends and the time your payment is due, to pay off that balance, and you're actually going to start building up more money in your checking account so that you never have to worry about if you have enough money to pay off your credit card bill. Alright, we've gone through a lot in this first video, so I'm going to end it here. If you like this kind of content, please hit the like and subscribe button. There's going to be a lot more videos coming out. We're going to try to post every couple of days. And if you have any suggestions for other finance topics or money topics, please comment below. We really appreciate your support, and we'll see you next time.